Hi, everybody, and welcome to Mrs. Mummypenny Talks. I have an online guest today, which is Michael Taylor of Shifting Shares, who I'm very excited to have you join me. So,
well, thanks for having me on.
Thank you ever so much for coming on. I'm going to do a very short intro to you of like just some stuff that I figured out or my impression of you, because we haven't really known each other that long. And this is the first time we've met in virtual life. We've not even met in real
Yeah.
life. But I found your Instagram maybe like a year ago, and I just thought, this guy really knows what he's talking about and is able to express things in a really easy to understand way. But
Oh,
you
thank
have
you.
like,
That's very kind.
looking at all your channels, about 300,000 followers, mostly on Instagram, but you've got a huge following. So whatever you're doing it right.
Well, I'll keep trying. Yeah, it's all quite new to me. I'm just plugging away. But
Yeah,
yeah,
yeah.
yeah, it's
And
grown quite quickly, which yeah, I'm quite appreciative of.
yeah, so go back to I think go back to the beginning of sort of where you've come from, and also like why you do what you do. Like what is your why?
So I am a professional trader, and
Mm.
I've been doing that since December 2016, when
Okay.
I took a bank loan from Deutsche Bank. And when I went to get the loan, it was a guy who looked like Boris Johnson. So that was a bit weird. And what he did was quite Boris Johnson-esque, I guess, because I said I want to borrow money to buy shares, and he said, "Well, we don't allow you to do that." So he ripped up the paper and he said, "Well, let's start again, but maybe you want to go on holiday or you want to buy a new car or something." And I was
Oh my
thinking,
God.
well, it's a bit weird because those things are definitely going to lose money, whereas stocks, might not. But yeah, I basically said I wanted to go on holiday. My wife and I got married in the Caribbean, and pretty much it all went into the trading accounts, and that was that. So I've been doing that since December 2016 for a living. I've done a bit of writing for FT and various other things,
Yeah.
and in June last year, I started making TikToks. Didn't really understand what I was doing. I still don't really
Literally a year
know what I'm
ago.
doing. Yeah, about a year and a half ago, yeah. So I started my first ones when I was in Mallorca on holiday, and just thought I will do one video a day for the next year and see what happens. And why not? Because I'd seen other people posting videos, and some people didn't actually know what they were talking about and had quite a big
Most
following.
people.
I mean, there's some really good people out there who know a lot and share a
Mm.
lot, but the problem now is that you can pretty much hold a phone up to your face and say anything. You don't need to back it up. You don't need to
Yeah.
have any sort of credibility at all. But you can rack up hundreds of thousands of views by saying lies, which is sad. Um,
Yeah.
but that's the social media world that we live in at the
Yeah.
moment. And I thought, well, at least I'll give it a go, see what happens. And yeah, it's going okay so far. So I'm gonna keep making the videos.
Going okay. Just 232,000 followers on
Well,
Instagram.
it's going quite well. Yeah, I couldn't have expected. Really didn't expect anything like that. I thought, well, if I've got a few thousand by the end of the year and people are watching, I'll just carry on.
Yeah,
But yeah,
but
now
it's
it's the opportunity to actually become a business, I guess. With
yeah.
everything that's going on.
So fundamentally you are a trader. That is your
Yeah.
job. So you, just to explain to people listening, and I will dumb everything down into the kind of language, like if I was talking to my teenagers,
Mhm.
you basically buy stocks and shares in companies, hopefully to make a profit, but I'm sure you
Mhm.
make a loss lots of times
Yeah,
as well. But hopefully the profits balance out the losses, and that's how you make a living.
exactly. Yeah.
Yeah. And you so some of the videos you've done, I should revert back. The big question we're going to be talking about today is, why do we need to invest? And that is such an open question, and we will meander around all the different ways you can invest, and we will come back to that big question. But what I want to share is I send a lot of your videos to my 16-year-old son, because
Mm.
you're talking about companies that he is interested in, and you're talking about the reality of that company. So let's say you're talking about I don't know, how Starbucks operates, and
Yeah,
how they pay their taxes, and how much money they make, and what
my
countries they operate.
nemesis.
Yeah.
Yeah,
You're not keen on them, are you? But also,
no.
you're not afraid to talk about, you talk about companies in a complimentary way, but you also talk about companies in a derogatory way if they're
Mm.
doing things that you don't agree with. And I really appreciate the authenticity and the sincerity of what you're talking about, and my 16-year-old loves it as well, so well
Well,
done.
that's good. Yeah, I'm glad to hear it. Yeah, I
Yeah.
think the problem with most companies that are listed on the stock market, unfortunately, a lot of them are garbage, and there's not really over time. If you look at markets, it's driven by the big value builders. So the Magnificent Seven have driven so much value of the S&P 500. If you look at most companies listed in the US, they underperform treasury bills over 30 years because a lot of companies do go bust. So really it's you
Yeah.
have to pick the right stocks. And if you just pick any 10 random stocks, the chances are you will probably lose money
Yes.
over the long run because
Yeah.
most stocks don't actually deliver that much value. Of course, there are periods where a company might go on a run for like 2 or 3 years, but it's very rare. If you look at the top 10 stocks 30 years ago, they're going to be different companies, a lot of different
Yeah.
companies in there,
Vastly different.
um,
Yeah.
and it changes. So yeah, a lot of companies are terrible, but as a trader, I see a lot of they're not. I won't name any companies because I can't be bothered with more legal suits, but there are
Yeah.
companies out there that are scams, that are legal scams. But you talk to a man down the pub, he the man on the street would call it a scam, but it's technically not a scam. And if you think about
Yeah.
these Lambo affiliate scammers,
Yeah.
technically it's not illegal. Morally bankrupt, yes, but it's not illegal to pretend that you were a trader posing in front of a car because the broker's slinging you 2 grand for every sign up, um, which I've been offered, and plenty more to do that. But yeah, I think I just tell it how it is, and I think
Yeah.
people appreciate that, and that suits
I,
me because I like to just say things how they are.
Yeah, and we are in the unfortunately we're in this world of and this is where we're going to meander off onto random subjects, but it's more fun. Um we live in this world that's so full of fakery and AI, but I genuinely think the authentic people shine through. And I am quite scathing about the world of influencers and finfluencers. I hate those words. If anybody ever
Yeah, I
described
don't
me
I
as
don't
one
really
of
like
them,
the word finfluencer. Yeah, I think
no, I,
content
I, I,
creator is far
I,
nicer.
I don't even like content creator. I just call myself a journalist.
Yeah, fair enough. Yeah.
Like I write for newspapers, so, and
Mm,
I work for the BBC, so therefore I am a journalist. But
yeah.
I really do think the cream does rise to the crop in our industry, and you can't be seen to be always being complimentary about everything you're talking about on social media. I think you do have to allow a little bit of your own life into your content creation as well, which I think you do a little bit of, just because so your trademark is you're always sort of wandering around in
Yeah.
normally by the beach or through a park or wherever you are, like, talking into your microphone. So I've seen so many people copying you, by the way.
Okay.
um I mean, what's the phrase? Something is the sincerest form of flattery. Copying is the sincerest form of flattery,
Oh
something
yeah,
like.
yeah.
Yeah.
Well, I mean, it's
um,
it's it's a nice, easy format, so yeah, I just got
yeah.
lucky that it seemed to work.
Yeah, and in fact, I copied it for one of my videos.
Well, why not?
Yeah, because I did a video for the FCA. I'm sure you love the
Hmm.
FCA. They're a good client to work with. But yeah, I did a video when my son was running past me because it was like Hare and the Tortoise theme, but I was
Yeah.
sort of walking along.
Yeah.
Anyway,
Okay. Cool.
thanks for the inspo. But yeah, no, I just think the authenticity always runs through. Okay, right. Let's go on to the big question, which is this: why do we need to invest? And I want to split this down into four different areas. So firstly, no, in fact, before I go into them, I want to start with the bigger question of what does investing mean to you? Because I think it will mean something different to me, and let's discuss.
Yeah. Um. So investing to me is about growing your wealth sustainably, investing in the economy, benefiting from all of that wealth that's been created by public companies. Um, yeah, and I think that is it's the easiest way to build wealth. It's a form of leverage,
Mm,
even though you are not actually leveraging yourself using derivatives or anything. But if you
mm,
think about it, if you buy, let's say, into the FTSE All World, there's several thousand companies in there, 49 countries. All of those employees in all of those countries and companies are working hard for you whilst you sleep. There's always someone working for you when you put
yeah.
your money into that ETF. So you can grow your money a lot faster by buying individual stocks or creating a business or but if you're essentially putting your wealth into the global wealth builder, historically, nothing's ever guaranteed, of course, then you've got a good chance of growing your wealth. And I think it's not really optional anymore. Like you have to invest in something, you have to do something. Because if you think inflation
Yeah.
has outperformed interest rates historically, it's in the Barclays Equity Gilt study in 2023. So if you just keep your money in the bank over 50 years, you're going to lose purchasing power and you're
Yeah.
going to be worse off in 50 years than you were today. So your money will erode over time. And the only way to avoid that is to invest in inflation beating assets. Now that can be it can be stocks, it can be property, it can be buying businesses, it could be crypto, it could be anything, but you
Mm.
have to do something.
What about, because where I would always start with investing is, I take it back to you, is investing in yourself. Because
Mhm.
fundamentally, right, I've invested in myself because I've got a maths degree. And well, I did pay a little bit for it. I mean, I
Yeah,
graduated in '99, so a while ago, but I then went and became an accountant. Um, but I've never stopped learning my whole life. I've always tried to do things which have, broadened my mental capacity, my mental horizons. And I've now gone back to college because I'm training to be a psychotherapist. Like, I really think you need to keep on, and those kind of things, they cost money, right? So,
hmm,
but you invest, I don't know, my son, who's just about to start university, is going to take out loans. He will be investing 40, 50 grand in himself in order to then earn more salary than he would if he didn't have a degree,
yeah.
hopefully. I mean, there's a whole argument we can have about whether degrees are actually worth that kind of money anymore. But I think investing starts from yourself.
Yeah, I would agree. So if you are 21, 22, come out of university, should you be investing in an ETF straight away? Well, I would argue maybe not, because first of
Mm,
all, it makes sense to have 3 to 6 months worth of savings just in case anything happens.
yeah,
But could you then do a professional course that could potentially add a couple of thousand to your salary? Because
exactly.
let's say if you pay 1,000 for a professional course, suddenly you can get a job that was going to pay you 2 to 3,000 more. obviously you've got to strip out the
It's a
tax,
no-brainer.
but you can be seeing a much faster payback on capital than if you were to collect 8 to 10% in a global ETF. So actually, yes, I agree. It does make sense to invest in
Yeah,
yourself first
yeah,
because earnings power is going to drive your investing in the future, and you can get a much faster return on cash by doing so. So, for example, I did the same. I spent 200 quid on a lifeguarding course when I was younger, the pool lifeguarding course,
oh yeah,
and my earnings jumped from the 4 quid or whatever I was making at McDonald's to I think it was like £9. So I
that was
actually
a really
recouped
good
the cost
investment.
pretty soon, and yeah, everything after was pure profit at a higher rate. So I absolutely agree. Investing in yourself, probably the best investment as long as it's correct, obviously. But yeah, fully agree.
Yeah, but you have to be careful with it. So, and I've actually fallen foul of snake and oil people. That's the best way to describe them, isn't it? Where it's a salesperson who really gets, particularly when you're self-employed, like you're
Hmm.
self-employed, like I'm self-employed. They get into your heads and they're like, "Oh, I can monetize your content and we can turn it into a course, and there's a fee of X thousand pounds, but you'll get your money back." I've tried. I mean, maybe I tried it with the wrong person. She was definitely the wrong person,
Oh
but
dear.
but there's a lot of those scammers. It goes back to the Lambo people as well.
Yeah.
There's a lot of people out there trying to pull the wool over your eyes. So I think with any of those kind of things, has somebody else done it that you know? Have they benefited from it? Like, is there recommendations? Like with anybody, like with a builder, like
Mm.
you'd never employ a builder if you haven't got recommendations from people you know. Like with a financial advisor, like with a lawyer, you always. So I think with investing in yourself, like make sure other people have done it and they've benefited from it.
Yeah. Yeah, absolutely. I think recommendations are probably the best thing that you can have. I mean, the
Yeah.
problem is Trustpilot can be faked
Oh,
quite easily. Um, so then there's an argument: is the equity value worth what it is if it can be faked? Because ultimately that is its prime asset. Maybe a
yeah.
topic for a different day.
Yeah.
But yeah, usually the best recommendations are from family and friends.
Yeah.
And
People you trust.
that is my cut off. I will not work with a brand unless I use it personally or would recommend it to my family, because
Yeah.
it's just not worth it. I mean,
Yeah.
why would you do that? It's
Yeah.
personally, I think it's morally wrong.
And I mean, the conversations we tend to have with each other offline are
Mm,
about sort of commercial brand negotiations, brand relationships, whatever. Like and I've got 12 years of history that I can share with you, and you've got super high growth in a short period of time. So I think we've got interesting views to contrast with each other. But
yeah,
I've always done that. You be super ethical about who you work with, put your money where your mouth is. Then you're truly authentic, aren't you? And also, I've only ever worked with one company in each industry pillar. So I will
mm,
only work with one pension company. I'll only work with one energy company, and it's the energy company I use at home. You know, it's Octopus
yeah.
Energy. It's so I, it just feels right, and I think it's a big part of why I'm still going 12 years down the line.
A lot of people come and go, right? I mean, 12 years is a really long
I'm
time.
old school.
Yeah, I think when you look at the YouTubers, saw an article before, like where are the big YouTubers from 10 years ago, and actually quite a lot of them had stopped, um, or they had something go wrong or whatever. Like I think the life
Yeah,
cycle of someone doing content can be sometimes quite short, and
yeah,
a lot of people, they struggle to get any traction and then
yeah,
just give up. I mean, if you think how many people that we know are doing it, there's like 100 times more people easily who are creating similar content to what we do that we've just never heard of.
yeah, yeah, and they've got like 100 followers. Yeah.
they might even have like 2,000 followers or something, which, is a
Yeah,
lot of people.
yeah,
2,000 is a lot of people. If you think about standing in a room in front of
yeah,
2,000 people, it'd be, it's a lot. Um,
yeah,
but yeah, it's just hard. But I think a lot of people can get, yeah, there's a lot of brands that will pay a lot of money that aren't really ethical. And we've talked about a couple. I won't mention them
yeah.
because you can if you want. I'm quite happy to talk about them. But
No,
yeah,
I'll
I
call
think
them out. I'll call
yeah,
out Klarna.
yeah. Well, Klarna's one. Yeah, yeah. They reached out to me and
Yeah,
were trying to get me to create content for them. So
yeah.
I did, and it was a YouTube video why you should avoid Klarna, which I don't think they were really expecting. I need to publish that actually.
You
But yeah, I mean,
really do.
what a terrible business model. It's just not good for people's financial health.
And I think this is probably why I resonate so well with you, because my background is I'm an accountant. I'm a commercial
Mm,
accountant, and I've worked for HSBC, Tesco's, EE. So I've three different
yeah,
industries. I'm very commercially
decent
astute.
companies. Yeah.
Yeah, and big companies.
Mm.
Um, haven't really worked. I did work for Wine Rack, who went bust.
Ah, okay.
So that was really interesting, working for a big company who went into administration, because I was in finance, so I
Yeah.
knew exactly what was going on. Um, and I also worked for Tesco's when, do you remember the financial scandal with Tesco's
Yeah.
when they were like,
2014. Yeah.
yeah, yeah, that's I was working there when all that was going on as
I,
well.
I
So that
wasn't
was,
going to say anything,
I was
but I'm
nothing
sure
to
it
do with
wasn't your
it.
fault. Yeah.
When you have an appreciation of how the financials actually work with a company, like I love to get under the bones of any brand I talk to, even if it's like, the coffee shop on my high
Mm,
street. I'm just so interested in, right, how do you make money? Are you making a profit? Like, are you able to draw a salary from it? Like, I'm so fascinated by the whole world of, and I know you are as well. And like, I've read emails from you because I get emails drip through from
mm.
you every couple of days where you talk about like ratio analysis of companies and stuff. And like, literally, I learned all that stuff in my SEMA
Yeah.
qualification, like in my 20s. It's so nice to hear it. I'm sounding like such a geek. But I just think it's really important to have that passion for understanding, the sort of meat and bones of a company. Then you can genuinely work out if they're financially stable and if they're right to work with them as a client, and
Mm.
therefore promote them to your followers. Um so I guess it just goes back to the authenticity, doesn't it, and the commercial understanding that we both clearly have of how the world works.
Yeah. Yeah. I think it's quite important to know how a company makes its money
Yeah,
because, well, if you're going to invest it, you need to know how it makes its money. So, where does the money come in? How does it come out? A lot of people will invest in a company because Rocket Man 909 on a bulletin board said it's going to go to the moon, which to me is crazy, but people will do crazy things. But also, if you're going to work with a company, you want to know how it makes its money because
yeah,
you want to know whether it's done ethically or negatively. So,
yeah, yeah.
yeah, that definitely helps. I think the basics of financial reporting and just understanding business are necessary if you're going to create content and make videos and things like that.
Yeah, and yeah, I've got, like, I could maybe count on a couple of hands the kind of financial influencers I would recommend, who have the kind of experience and knowledge that we have,
Hmm.
because it's based on life experience as well, isn't it? Like, I worked for 16 years for these like
Yeah,
massive blue chip companies. I did a lot of exams, and I've run my own business for 12 years. So that
yeah, it
a
definitely
lot
helps.
comes with experience as well as qualifications, doesn't it?
Mm, yeah, and there's a lot of people out there who are creating content about ETFs and ISAs, and that might be, there's nothing wrong with that. It's good stuff. It's people should know it. But yeah, unless you've worked in the industry or being
Mm,
around a lot of companies, you were always going to struggle to have that in-depth experience. As you say, you've
mm,
got over a decade with these big companies. I look at companies every day. I've got the companies reports
yeah.
going through annual reports to see what's buried in the closet.
They are
Is
long
very different.
documents.
Yeah, they are. Yeah, but you always need to check the going concern, the financial notes as well, because management will put what they know most people won't read in there.
Yeah.
So that's where you need to look. And if you can't be bothered to come through an annual report to before you were going to invest, then you sort of deserve to lose your money. I mean, Revolution Bars is a classic. The
Yeah.
directors just absolutely rinse shareholders year after year with outrageous salaries. They,
Yeah.
in my opinion, are not aligned with shareholders, and I just don't understand why you would accept that. Because yeah, you can vote on it at the AGM, or you can just sell your shares. So
Ultimate
you know,
power. Yeah. Yeah.
yeah,
Yeah.
you don't have to hold these businesses, and I don't
Yeah.
really understand why people keep funding them either, because it's clearly a business model that is just not working. Um, but yeah, someone might look look in the street one day and say, "Oh, Revolution is busy. There's loads of people in. I'm going to buy some shares," and it's great to have that enthusiasm, but ultimately you need to do more work. If you don't treat buying shares as a business, you will lose money.
Yes, and from experience, I have I have tried to buy individual shares over the years. Um, it's quite interesting to look at the different reasons of why people buy shares, and you'll know this
Mhm.
better than me. And I can tell you, I've made emotional purchases because I worked for Tesco's, so I
Mhm.
bought some shares in Tesco's. I lost money. I had to hold on to those shares for about 10 years before I got my money back. And I was
Yeah,
adamant, and this is probably not the right thing to do either, but I wanted to wait until I'd got my £4 a share back again before I sold them. So
yeah,
completely dead money for 10 years. I mean, it was
mhm,
it was it was 5 grand, so it wasn't, my life savings.
yeah,
Um, but I have also I had some time off. Oh, one of my maternity leaves, actually. I tend to get a little bit bored on my maternity leaves because I've always worked for companies and I get like 12, I take the full 12 months off. So I did a little bit of trading in one of my maternity leaves. And
right,
I did do the ratio analysis like what you do, and I went at it from an analytical point of view. And I think I probably came out evens,
that's
which
better
is
than losing. Most people lose, so well done.
exactly. But yeah, I'd say probably most of my share purchases have been emotional or um bias from listening to people. So what,
Yeah,
that one? What's the official term for that?
um,
Copying people.
confirmation bias.
Information bias, yeah.
Yeah,
Which could be insider trading.
are you
Isn't
talking
it?
about stock promoters or people who are paid to
Yeah,
talk
yeah.
about
I'm
stocks?
talking
Or
about, yeah. So sometimes where you see like, look at this stock, watch this
yeah,
stock, it's a riser. Yeah.
mm.
That's
Okay,
not
yeah.
insider trading.
Now, insider
Very different.
trading would be you would have to sign an insider declaration where it would outline the consequences of revealing that information to the market as it's financially sensitive. So unless you have signed that, yeah, it wouldn't be insider
So
insider
you can
trading.
so you can in effect say anything you want about a stock in a company.
You can if it's an outright lie, they might take legal action against you, but you can
Yes.
say it. I mean,
It,
I got a threat before. There was a company called Emporium
yeah.
that suddenly started making a lot of revenue for no real apparent reason. And I tweeted, a lot of the companies that went bust had revenue spike, but they didn't collect their cash. And, someone threatened to sue me for it. And even though
Wow.
I hadn't actually said it was a fraud, but then 6 months later it went bust because it didn't collect its cash. So I was right. Nobody ever said thank you for warning me or anything. I just got a load of abuse and people threatening to come and get me, which
That's
yeah, they
quite
never did.
scary.
Yeah, people don't really like it if they are holding a stock and you tell them it's a fraud. And in
Yeah,
this case, I didn't even explicitly say it was a fraud. I just said, look out for this thing. But
yeah.
it's a sad reality.
Don't
It's
shoot the
easier
messenger,
to
right?
scam someone than it is to convince them that they have been scammed. Like once someone's been scammed, like they're gone. You could show them proof that it's a scam. They will not want to hear it. They will just
Yeah.
abuse you. Um, yeah, so it's just not worth it.
Yeah, I guess it's like brand loyalty though, isn't it, in a way? Like, you get some people who are staunch supporters
Yeah.
of Marks and Spencers. They can
Mm.
do no wrong. They are the
Yeah.
most perfect retailer in the world. Well, nobody's perfect. And I mean, I do actually rate Marks and Spencers at the moment. Like, I rate them from the stock they're selling. I think they're
Mhm.
making good merchandising decisions, but I also appreciate that they've had that the cyber breach and
Yeah,
lost
which has
so
wiped
much
out
money.
so much of the profit. Yeah.
Oh my gosh. Like, I mean, they haven't released their annual accounts yet, sort of fully disclosing
Mm.
the impact of that yet, have they?
Um, I,
Or have they?
I'm trying to think. I'm sure I saw a headline that profits
They
were 99% down, so I'm not sure if they have. It's
99%
FTSE
down.
100, so it's not one that
Yeah,
I look at
not on your
that
radar.
much. Um,
Yeah.
but yeah, might
Yeah,
might be worth a video.
yeah, because
Have to
I
do some
my first
research.
so my first ever job was with Marks and Spencers. So I was on their business placement program during my degree.
Hmm.
Um, so I worked for them for like a year, and then I did my dissertation for them. They paid me to do my dissertation for
Oh,
them,
nice. Wow.
and then they offered me a job on their graduate scheme, but it was in 1999 when they had financial problems again, like the
Hmm.
cycles. I mean, that's
Yeah.
another interesting thing to go into. And I found out they'd made me redundant from the Financial Times.
No, no. Oh dear. That's not on, is it?
Yeah. But they gave me a check for like 1,500 quid, and I was
Mhm.
22. I was
Right.
like, oh my God, this is so much money. Like, I'll take the money. And then it was amazing what they did, because they knew that they'd messed up because the FT broke the
Mm.
story before they did. They got about 20 companies in to talk to us. There was about 20 of us who'd all lost our jobs. So it was
Yeah.
people like Tesco's, Sainsbury's, HSBC, MI5, Waitrose, and they all were like, just take your pick. We'll all offer you a job. So I chose HSBC, and that's how I ended
Oh,
up
wow.
in.
That's really nice of them, to be fair. I mean,
Well,
not
I
not
meing, they
sure it would
massively
happen
messed it up.
today. Yeah, yeah, but I mean, you now I wouldn't expect companies to do anything. I think times have changed.
Well, yeah, that was 26 years ago. Okay.
Mm.
Quite a while. Yeah, okay, right. Let's talk about other ways of investing. We spent a lot of time talking about stocks and shares there. I think
Mm.
just go back to basics a little bit, because you did touch on it. The first when you're dealing with money, okay, if you've
Mm.
got debt, the first thing you should always prioritize is paying off your debt. I would also say, and this is just what I personally do, you might do it differently, but I always like to build up like a bit of a emergency fund whilst I'm paying off debt. And this could be like 1 or 2 grand. It's just for things like if the washing machine breaks, or if,
Yeah.
it's just to make sure those smaller things are covered. Um, so that's what I would always do with sort of the basis of money. Then once debt's paid off, particularly when it's interest paying debt, then you build up a bigger emergency fund. Again, it depends on your risk tolerances. I mean, I would be happy with 3 months worth of expenses. Some people want
Mm.
6 months, some people want 12 months, and you should keep that in easily accessible places. And once you've got that, I think that's when you can look to the world of investing in. The simplest form is stocks and shares ISA, which is you've got two main types of ISA. You've got your cash ISA, where you can put your cash savings, and then you've got your stocks and shares ISA, where you can put your funds, and a fund is just a group of shares, or you can put individual shares in there. To keep things very simple, because a lot of my audience are women, sort of 35 to 55. I just put 200 quid a month into like a Vanguard stocks and shares life strategy funds. That's literally what I do to keep things simple. I'm not recommending them in any way. That's just what I do. Because I don't have time to go through the individual stocks and shares, and I know I'd lose money. So, and I do not, and I don't lose money from my fund I put money in, because I've had it for such a long time. It grows nicely by, I think I'm running at about 9% average a year over the last like
Nice.
5 years. Yeah.
It's pretty good.
Yeah. And you can't predict the future based on the past. I'm just covering
No,
myself with all
definitely
of
not.
our
No. Yeah.
warnings. But generally, when you invest in funds, right, it's the simplest way of investing in the stock market, isn't it?
In an ETF, yes. So there are
Yeah.
two types of funds. You've got active funds, which might be hedge funds, or it might have a portfolio manager who's trying to generate alpha, which is beating the market. And a
Yes.
lot of money will go into these funds to try and do it. Most of them fail. Most of them actually underperform their respective benchmarks, but it doesn't stop people trying. And these funds will typically charge anything from 0.5% to 2% a year to manage the
Yeah.
fund.
Yeah.
So already there's a quite high threshold. And then you've got exchange traded funds, which is a basket of securities. Could be stocks, could be bonds, could be other asset classes within one single exchange traded fund. So you can buy it on the stock market like a stock, but it's just a fund that contains
Yeah.
all of these securities. And personally, that is what I think most people should do. And again, obviously this is
Yeah.
not financial advice, but
No.
if you want to grow your wealth, an ETF can provide you diversified exposure to a broad market or the entire global investable market, like a global ETF.
Yeah.
Yeah, so I think that is the best way. And just to come back onto debt, yes,
Yeah.
paying a lot of people will go for the biggest sum of debt first. That doesn't really make financial sense. It makes sense to attack the highest interest rate of debt
Yeah.
because you will save more by
Yeah.
paying that off. And one strategy that you can do, again, not recommending it, but is if you can transfer that onto like a 0% balance transfer card,
Yeah. 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 Yeah.
you can then save on the interest for anything for up to 2 years and just keep paying that off. And as long as you make sure that you can pay off the amount before the teaser rate expires,
Yeah.
you can be better off that way by doing that. But again,
Yeah.
look at the terms and conditions before if you do that and make sure that you can actually pay it off. But that is another way of
Yeah.
actually, you take on some more debt, but it actually leaves you better off financially, which a lot of people wouldn't consider because it sounds counterintuitive to take on more debt,
Yeah.
but it can leave you better off.
Yeah. And that's all dependent on your credit score. I
It's
do a lot.
dependent on a lot of things, yeah, like your personal risk tolerance, credit score,
Yeah.
how much debt you've got, what rates, and what you're actually being offered.
Yeah. 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 I've, by the time this comes out, this article will be quite old, but I've got, I had an article in the Telegraph which is about my personal debt.
Mhm.
I am I'm amazing at helping other people with money. I could literally help anybody. I mean, I don't work with people on a one-to-one basis,
Yeah.
but I'm amazing at describing things and writing about it. But I'm not very good at my own cash flow management, and that's something that I'm working really, really hard on. But life happens, divorce happens, has happened to me.
Mm.
Where my children live, circumstances have changed there. Like, it was meant to be 50-50. Now they all live with me. And when big financial things change, debt becomes an essential thing to happen, because how else do you keep the roof over your head? I mean, I
Mm.
guess I could sell my house and move up north, but I'm not going to do that because I'm not going to
No,
disrupt my children's lives. So, I mean, debt. I've got a couple of other episodes on debt. It's a big issue to be explored, but I would say don't be investing if you've got debt.
yeah, yeah, I agree. I mean, obviously, that makes me a hypocrite because I literally borrowed
Yeah,
money to invest, but that
that
is
was such a risk you took there.
not really. It sounds like it was, but I was
Yeah,
never going to put
you
it
knew
all
what you
into
were
one
doing.
company. And I thought, well, what I could do is not have to risk the entire 20 grand. If I'm 10 grand down, I can just say, right, this isn't working, go back to work. And
Yeah,
I was at the start of my career, so it's not as if, I was earning a really big salary, had a
yeah, yeah.
fat mortgage, kids in
And you
private
didn't, you
school.
didn't have kids, and yeah,
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 exactly. So it wasn't really that much of a risk, although it sounds quite risky. And if you had no idea what you were doing, it's incredibly risky. But I didn't really have any idea what I was doing at the time, so yeah, I guess it was quite a risk. But yeah, I would never recommend to borrow to invest, and it makes sense
yeah,
to pay down debt before you start investing. Yeah,
yeah.
absolutely.
Right. I want to touch very littly on pensions because
Hmm.
pensions is also a form of investing, but it's a long-term plan. Maybe not so long-term for me because I'm 48 and I will be able to access my pension money when I am 57 because that age changes from 2028.
Hmm.
Um, but yeah, all of these sort of products that we talk about, a savings account, a cash ISA, a stocks and shares ISA, a pension, they're all just sweetie wrappers for different types of sweets. Um, where a pension is just a long term investment, but it's got some really juicy benefits, like you get some money back from the government. Your employer normally chucks a nice chunk in when you put money in as an employee. So and I always think as a person, I am a risk taker, as obviously you are, but and I like to live a nice life now, but I also want to have a nice life in the future. So yeah, I spend money on holidays and nice things now, but I also have money put aside in my pension to cover me when I'm older because I don't want to just live off the state pension, when I get to
No,
that point. So
yeah, I think pensions are great, and yeah, it makes sense, right? Because there's no point living frugally and in misery now
yeah.
in order to retire a few years early. And I don't really understand
I
this
don't understand
this
that
whole concept.
movement.
Yeah, it's a
There's
bit
this
silly.
movement called the FIRE movement, which
Yeah.
is financially independent, retire early, and they get
Mm,
really excited when they can like retire at 38 because they've lived off of nothing for
yeah.
like 15
And then
years.
they're going to continue to live off nothing. Um, I mean, the issue is if you don't like your job, change your job, do something that you
Yeah,
enjoy. I mean, I enjoy the market. I enjoy making videos. I enjoy researching things and learning about things. So obviously I work a lot, but I enjoy what I do, and I'm quite
yeah,
lucky in that respect. But if you really hate your job, you must like something. And yeah, if you might have to take a pay cut, that's
yeah.
fine. If that's just life. But equally, you could start a business in something that you enjoy, and it could do really well. So yeah, I think the issue is this idea of being financially independent and retiring early. Yeah, great. Just don't take it to an extreme and
Yeah.
enjoy your life now. Because yeah, tomorrow I could walk into the street and a cyclist could knock me over and kill me or whatever. Some of these line
Yeah.
bikes are insanely dangerous. They weigh a ton. Um, but I mean that could happen. And then if I'd have been saving my entire life, what would have been the point? But equally, don't spend all your money now because yeah,
Mm,
unfortunately, the state pension is pretty grim. Um,
mm.
it's not really a nice life if you were reliant on that.
Yeah.
So I think you need to be taking it into your own hands.
Yes, agree. And then what's your view on pension? Sorry, not pension, on property. So do you own a house now? Do you have a mortgage? Like, because some people,
So by the time this
because
comes
everything's
out, I will
different
have a
now.
new property that I am renting,
Yeah,
and I have another property in the north that I've
yeah,
previously let out, but also just kept it as like a second place for when we come up north.
yeah.
But as we were talking before this, I'm not sure if it makes sense to ever actually own my main residence, because you can, if I rent it out,
Mm,
the new renters' rights bill is coming in, no fault evictions. I mean,
yeah,
if you've got a good landlord, it doesn't really affect them, because you
yeah,
know when I was a landlord, I wanted good tenants so that they would not cause any problems and just pay the rent, and that was that.
yeah.
I only asked them to leave because it was costing me more in hotels when I was coming up to my hometown to visit than I was making in rent. So it didn't really make any sense. I mean, there was one time I was staying in a hotel literally round the corner and paying double for the time that I was there than I was actually charging in rent. So yeah,
Yeah,
it was
that
just
doesn't make financial
financially
sense.
unfeasible. But yeah, if I would want to have exposure to property, I think it would make sense to rent the main residence and then build a property portfolio, rather than having such a concentrated bet on potentially a London property, which who knows if it will go up. I know someone who's got a flat now, bought it in 2016 in Chiswick for 370, can't offload it for 350. So that's 9 years
What?
later.
Is it?
And also can't rent it out because the mortgage is higher than the rent. So this idea that property always goes up and you always make money is just not true.
No.
And that's not an
No.
isolated incident. I know a couple of people
Mm,
in
mm,
London who've bought around that same time
yeah,
and are actually in negative equity after, 8 to 10 years.
yeah,
So for me, do I really want to take such a concentrated bet? No. And also it
yeah.
would tie up a lot of capital.
Yeah, and that's in effect, that's the I guess it's a bit of a problem that I've got now, where property is really important to me personally because of my emotional needs. Like
Mm.
security is really important to me because my parents died when I was a teenager, okay? So my house was taken away from me.
That must have been quite
Um
horrible.
it wasn't great, no. But and I didn't inherit any money either because my dad remarried in between, but there's a whole nother story there. But I get on very well with my stepmom, who is still alive. Uh, so it's really important to me to have a roof over my head. So I bought as young as I possibly could. I bought when I was
Mm.
like 24.
Oh wow,
Um, yeah, I know,
that's a
it's
big
crazy.
achievement. Yeah.
What? Not really, because I was I was with a guy who was 10 years older than me.
Mm.
We daddy issues. My daddy had died, so I got together with somebody 10 years older than me. I've had a lot of therapy, so that's how I'm being flippant about these kind of things.
Right.
Yes, we we both worked in the city. We were both accountants. So we were earning like probably 100 grand between the two of us, and like I was 24 and he was 34. So we bought a house easily near Brentwood
Mm.
in Essex, and we bought like a beautiful 3 bedroom house for 200 grand in near
Oh
Brentwood in
wow.
Essex, which I've looked, and this was 20-ish years ago,
Mm.
20, oh god, 24 years ago. But the same property now, that 200 grand property is now worth 800 grand.
Mm. That's not a bad return, right?
But I mean, I split up with him, so that didn't sort of work out financially. But I just think it was so easy to buy properties then because number one, I mean, I'd obviously worked hard and got a good degree, and I'd got a good job. Also, I had a boyfriend. Life is a lot easier when you're with a partner, okay, buying a property. And it was 200 grand to buy a house. So we only had to put a deposit down of like 20 grand.
Mm.
And but the situation I'm in now is so I live in a 4-bedroom house in Hertfordshire with my 3 men, my
Mm.
teenage boys. They're 18, 16 and 13. I'm divorced like 5 years ago, and I fought to I fought to the end of the world and back to keep that house, and I bought him out. So I've got a mortgage of about 270 grand. But the house is worth around 600 grand. So
Mm.
brilliant. I'm sat on all this cash, but I can't touch it because
Yeah,
so I'm exactly that situation you're describing. All my assets are tied up in my house.
yeah, which is not a terrible thing if you're gonna leave it to your children. But yeah, I think the idea. I mean, I wrote an article. Was it in the FT about? Oh, that was about overpaying your mortgage, which really triggers a lot of people. But I
That
think it was
really
somewhere
does.
else. But yeah, this idea that your home is an investment is not. A home is to live in. It's not an investment. If it's
Mm,
an investment, you were looking at things cost consciously. Whereas if it's your home, you might buy those fancy, marble countertops, which might be really nice, but they're going to set you back 15, 20 grand. Whereas if it's a rental, you're probably going to get the mid tier, which might only cost you a few hundred. And
yeah.
homes just cost you money. I mean,
Yeah.
last summer I had to do rendering, and it cost me like 3 grand. I was like, what even
Oh,
is
that's
this?
so
I don't even know
boring
what
as
rendering
well.
is. Yeah, it's like 3 grand down the drain. Then something else happens, and you got to pay someone else, and it's like, it just sucks money. Um, but
Yeah.
yeah, I have, I think, close to 80 of equity in that property that is just sort of sat there dead. So,
Yeah.
so yeah, it's
It's just dead
it's
money,
not an
isn't it?
insignificant sum,
Mm,
but it's not being used at all. Um, and yeah, I think property can be a good investment. It's not my expertise, but I know some people who
mm,
do. I know a lot of people who lose money mainly because they come into it, they don't treat it like a business. Like
yeah.
anything, if you don't know your market, if you don't do the work, you're probably
Yeah.
going to lose money. But there are people who treat it professionally and
Yeah.
do quite well. And it is
Well,
possible. It just takes time and effort.
yeah.
Um,
And it has to be your full-time job of like managing a property
yeah,
portfolio.
you've got to take it seriously. Yeah,
Mm, yeah.
definitely. Like with
So
anything.
yeah, and I just want to touch because I'm aware of time now. Because there's 3 more things I want to ask you. 4 more things. I want to touch very quickly on crypto because it's something that my children ask about, and I always say with crypto, don't play with anything you don't understand. I do not understand. Actually, I do understand exactly how cryptocurrency works, and I wouldn't put any money in it. But I'm risk intolerant towards cryptocurrency. Um, I think I think the message I want to send out is based, as we've already said repeatedly throughout our conversation, just don't go near things you don't understand.
So Bitcoin is the best performing asset of the last 2 decades,
Mm,
but does it have any real utility? Because when people talk about it, they're talking about the price, which is basically speculation. So I think it's
mm,
fair to say it's a speculative asset. It might have uses, but no one is buying things with Bitcoin as a currency. They're just not. Maybe the diehards are. So I don't think it makes sense. I don't think it's silly to have a little bit of exposure to it, but not a lot. I mean, there's some people who put all of their money in Bitcoin. That is insane. But if you've got 5%, and again, this is not advice, but if you've got 5% of a well diversified portfolio in Bitcoin or some ETF that basically buys the top coins, I don't think that's silly. I don't do it myself
mm,
because I manage my own money, but I
mm,
don't think it's silly.
mm.
But you
But be
also have to
prepared to lose
expect
it.
that yeah, be prepared to lose it. Yeah, which is why it should only be, in my opinion, a max of 5%.
Yeah, yeah, yeah. Right. 2 quick fire-ish questions. What's your biggest financial mistake?
Not selling a stock when I had the opportunity to do so, because liquidity, when I was trying to sell, liquidity was down, and yeah, it wiped off a good chunk of profit, at least six figures. So that was annoying. Um, didn't make that mistake again. So yeah, that was quite frustrating.
Your own money. You lost six figures of your own money.
Yeah, I mean, I
Wow.
still came out with a profit, but nowhere near as what it could have been.
Yeah. I think we learn a lot more from our mistakes. But
Mm.
so what's your biggest financial success?
Um, Probably that same share.
No, it can't
Yeah,
be.
yeah.
Because you bought and sold at a different time.
So overall, I think it was the biggest P&L monetary gain at that time. Yeah, and it was complete garbage as well.
Oh man.
Yeah, but that's it with individual shares. I have bought companies that I knew were frauds because I knew they would go up, which is counterintuitive to investing. So what I do is completely different to
But that's
investing.
because of your knowledge and your commercial acumen and knowing what the market will do, and
Yeah,
that's
but
probably like
it's a
innate
bit
stuff
like,
in your head as well.
tennis and table tennis. They're obviously two very intricate sports that are similar but completely different at the same time.
Yeah.
And just because you might be good at trading doesn't mean you were good at investing, and vice versa. So I myself would not say I'm a great investor, um,
But you're
but
a
I
good
am.
trader.
But yeah, I'm doing okay as a trader. Yeah.
Good, good. Um, Now I'm just thinking of the Wolf of Wall Street.
No, yeah. That usually when I say trader, people assume I'm the one smiling and dialing and putting people into crap companies. Like, I'm in that scenario, I would be the schmuck on the phone who's buying into this garbage. Um, yeah, so I'm on the other line. Like, I'll have brokers.
Yeah,
I always tell them just to send me an email, and if it's of interest, I'll give them a call. But yeah, as I
yeah,
say, most companies are garbage. The ones raising money are garbage, and I
yeah.
won't bother giving most of them money.
Wow, gosh, very fascinating business. Okay, cool. Right, where do people find you, Michael, if they want to follow you, and what do you want to promote? Say whatever you want.
So my Instagram is at Shifting Shares. It's the same for YouTube. TikTok, there are around 700 accounts of me. I only have two accounts on there. It's at Shifting Shares and at Shifting Shares Replies, which is the main one that I'm using at the moment. If someone that looks like me DMs you, emails you, messages you on any platform, it's not me. Um, as much as I would love to individually chat to people, it's impossible for me to do so. And yeah, I
Um,
just don't DM ever. So it's not
no,
me. Please ignore it. It's a scam.
same from me. There are
Yeah,
so many fuckers out there who are
sadly, yeah. And
DMing
sadly, they
and pretending
succeed
to
as
be us.
well. But yeah, basically, if it looks too good to be true, it probably is. And if you think it might be a scam, it probably is.
That's a really good thing to end on. If it looks
Mm.
too good to be true, it very likely is.
Yeah. Yeah. Well, thanks for having me, Lynn. It's been a pleasure.
Cool.
Thank you so
That was a
much.
really good discussion. Thank you. And yeah, everybody go follow Michael at Shifting Shares. He's got a really, really good Instagram account that even my 16-year-old enjoys. So that's quite an
That's good to
achievement.
hear. Yeah. Thank you.
Mm, cool. All right. Thanks, then.